Bismillah Rahman Rahim. Assalamu alaikum, everyone. Hussain Qazi here, your presenter for FM P2P March 20 session. Assalamu alaikum, everyone. Hussain Qazi here, your facilitator for P2P March 20 ACCA session. I hope that all of you people are doing well, and my prayers to you, to all of people. And as you know that today's session is about the P2P prepare to pass March 20 FM examination. So before starting the session formally, I hope that all of you people are getting my voice clearly, and screen visualization is also clearly appearing at your side. I hope that the voice is very much clear to you and everything set with respect to this webinar. So before going to start the session related to this subject, first, as a tutor, I wanted to introduce my profile, a brief profile. I'm not going to take up very much time because the time is very much precious with you people with respect to examination, just some weeks remaining. So my name is Hussain Qazi. ACCA appointed me to support you for the FM examination for March 22, 2020, and this session called Prepare to Pass Examination. I have 14 years of teaching experience for ACCA qualification. I'm ACCA member, fellow member in fact, and my specialty to conduct the sessions, that's FM, AFM, and SBR. On-campus teaching, I've been engaged with on-campus teaching at Tabani School of Accountancy, a platinum status college of Pakistan. And now I'm also a co-founder of online lecturer that provide the online solutions to the ACCA qualification as well. Alhamdulillah, I got my students got multiple times nationwide positions in Pakistan and beyond. And thanks to ACCA, because ACCA invited me multiple times for different exam focused sessions, and especially thanks for this P2P session. I'm also serving as a director in HRS Network. You can approach me for at my WhatsApp contact. That's mentioning on the screen, 0092-321-827-1784. And particular for P2P, for P2P March 20, I repeat, particular for FM practice to pass session March 20 group, March 20 exams. I have established a group, WhatsApp group, and you can contact me after the today's session or after the completion of this series of session from this WhatsApp group. We can facilitate you from our platforms to support for March 20 examination. Now it's time to moving forward about the session related to this subject. First of all, candidates, we must have to know about that. What will be the structure, or in a very organized way, what is your expectation? What should be your expectation? And what is my expectation? That's there should be no gap between that. That's what the purpose of this particular financial management examination. Candidates, do remember one thing, the very, very much important thing. One of the core purpose of this particular session, one of the main purpose of this particular session that ACC assigned me to for this. That's bridging the gap, about the expectations, bridging the gap about the expectation between the ACCA exam team and the students' performance. Once again, bridging the gap. The main purpose of this particular sessions is to bridge the gap between the expectations of the ACCA exam team, ACCA exam maker, and actual performance of students. Candidates, yes, considering this point, our main purpose is to support you to qualify the exams. I will try my best to deliver the core things, to deliver the concrete matters, to deliver the smart techniques, theoretical and calculation, that's bridging the gap between the expectation of the team, exam team ACCA, and your performance. That will definitely support you to qualify a nearby exam. For this bridging, yes, the important thing is that a briefing required for all core areas of the syllabus. Some practice questions, practice exam question will also be part of this particular session. We will focus not only the calculation, but also the theoretical aspect as well, because I know that, and you people know very well, and in fact, you people are, I am very much sure that you also facing a challenge how to handle the theoretical aspects. So if your vision is not clear, if it's not clear what is the expectation of the examiner, and you are doing your thing, that means that you are not up to the mark to meet the destination, and destination is to qualify the exam. In this session, we will definitely analyze the trend of recent past exams. Do remember, this trend will support you, candidates. This trend will definitely support you to qualify the exams. Trend is very much important. As well as smart techniques for the successful exam attempt. Don't waste your time unnecessary, or don't put your energy unnecessary if the things are workable in a smart manner, like the calculation of the IRR. You don't need to calculate the IRR manually, but you have to attempt the IRR working on the system. That will definitely save your time. It's just an example. Smart techniques. For the smart techniques, how to handle the theoretical part, it's also the part of this session. And furthermore, finally, you will pass your exam if you obey my tips, if you obey my required guidelines, which I will give to you. You will definitely be able, inshallah ta'ala, God be willing, may Allah willing, you will be able to qualify your exams. Nobody can guarantee, but I'm sure that after this session, you will be able to properly direct your answers. You will get the proper direction for your preparation to proper support. And if you develop that part, you will get your destiny definitely that wise. That is, and the destiny of course is to qualify the exams. So this is the point, candidates. Furthermore, starting the session about the syllabus, candidates, you must, first of all, you must have to know that the passing trend of the FM exam, the passing trend of the FM exam. What is the passing trend of the FM exam? You can What's that? What's the passing trend? One moment, please. Yes. Yes. The passing trend from September 18 to December 19, the ratio is initially start with September 18, that's more than 46%, then drop the results this way, then result upward to the 50%, then downward, then 50%, then downward. So the graph is very much fluctuating. December 19, last exam, 43% result, only 43% result. But the exam, the actual results already moved towards in the previous semester since the 50%. This is a concerning point. Why the result dropped? Why this result drops? And we need to identify this. And this is very much important for you as well. Because if the result was 50% before December 19, that means in the examination setting, the 50% chance you will qualify the exam. But if the result is 40%, 43% December 19, for the March 20 examination, the students have an expectation that we have a chance of 43% to qualify, but the 50%, 57%, more than 50% chance to disqualify the exam. I'm not saying that. No. I'm not saying that. This is what the trend. I have a good expectation that you people will have to qualify and you people become the part of under 43%. So that's important. How to work on that? That's our result become under 33%, 43%. So that's the important thing that's required. How to prepare our result, how to make preparation that we are become under 43%. That's important. Moving forward, candidates, if you wanted to get a good lesson from my side, first of all, listen carefully about my expectation. Do remember one thing. Softly, at every part of the life, at every project of the life, the first thing I have in my mind that power of positivity. So be positive. I know that today is 10th and just 3 weeks more to go for the exam. But the important thing is that power of positivity. Inshallah, you will qualify the exam. You will under the 43%. But for this, you need to put in efforts in the right directions. So I've already discussed what is the objective of this particular session. Candidate, number one, the most important thing, the objective is to provide the right direction. If your direction is not right, and you are putting your effort, you're just wasting your energy. And you're just putting your effort just like a donkey cart. I'm sorry for that. I really respect all of you. You know that the pilot, with respect to the aircraft, whenever he has a plan, let's suppose he is on the flight is on air and the pilot wants to land the aircraft. So before landing, first of all, we have to make an approach. The pilot make a clear approach. What's the destination to need for the runway and point of runway to land the aircraft? First of all, if you are in air, let's suppose you have to identify What is, where is, where is our runway? And based on that runway is your destination, runway is your result. But focus the approach. Make up an approach. Make up your mindset. What is the right direction to land the aircraft? So that's the important point. The objective is to provide you the right direction to pass the FM exam and direction which is closer to the exam mindset. We will start the session to read about the examiner expectation. And after that, definitely next 5 days, we will drill down the practice questions according to the, not only just practice the question, no, practice the question, and these questions definitely drill down practice question. That's inshallah will be the eye opener for you. That's okay. That is the point. That is the way to deliver the solution if I wanted to qualify the exam. So candidates, we have talked a lot what we will do. Now it's time to start our journey to get the right direction. Candidates, this is what our agenda. Day one, initially 1 hour, we will discuss what is our what should be our approach. So we wanted to fill that gap by bridging the situation between the examiner expectation and our actual preparation direction, as I've already told you. So this is from where we can get this idea, bridging the gap. There is a document that's called Read the Mind of Examiner, and I can bet on it. I can bet on it. More than 90% of you people are here who haven't read the Mind of Examiner article. If any of you have read it, you can just reply me on the answer bar. I will really appreciate by announcing the name. I can bet on it. Majority of you haven't done it. That means you have started your preparation without identifying or drilling that point. Who will make the exam what is actual expectations. That's the point. Okay, and follow this, read the mind of the examiner. We will start the investment appraisal matter. Business finance is the day 2, including cost of capital and business finance other aspects. Day 3, business valuation and some part of risk management. Day 4, purely risk management and some part related to working capital. And day 5, related to working capital. Timings are mentioned below. Day one, the first thing about day 1, the first thing, that's a read the FM examiner. I'm going to highlight some important aspect related to the FM examiner. Okay, and from where I have got these things, I got these things from the document of the examiner, and I have already met with the lead examiner at the ACCA conference. This doesn't mean that he have disclosed something confidentially. No. He actually discussed in the conference a lot of things, especially about the expectation from the students. And you know very well, one team is examining team, another team is marking team. So in the conference, the examining team and the lead examiner shared us what we have already mentioned to the marking team, that how to mark the students' answers according to the expectation of exam team. So whatever next 10 minutes about the read the mind of an examiner, I got that point from the examiner meeting at the conference, and the document read the mind of FM examiner. And I strongly suggest to you that don't delay, and immediate after today's session, you must have to read that particular article. Okay, let's start the game. Candidates, read the mind of FN examiner splits two parts. Number one, how to approach to study FM, not ACCA FM, the subject financial management. The subject financial management. How to approach the subject financial management. And another thing is that how to approach the exam. That's what particular mistake you must not have to do in the examination. Huh? So first of all, the FM approach. This one. Approach to study finance. In any part of your life, whenever you study finance, either financial management, either advanced financial management, either CFF, whatever. First of all, you must have to develop your right approach to study the finance. Candidates, normally, when students study the finance subject, he mixes the subject of finance with the accounts. Do remember, you are not studying accounting. For example, you study F7, that's FR. For example, you study SBR. That is about financial reporting, business reporting. What is the difference, actual difference between the financial management and financial reporting? The core difference. Financial reporting is about past. Whatever the transaction done, you have to report it. Number one. But the subject financial management is not about past. It's all about planning. It's all about future. That's why. Now, make up your mind, recall your mind. You have studied investment appraisal. What do you say? Is this about past? No, it's about future. Investment appraisal. Cost of capital. Expected return. Business finance. The company will issue rights issue. The company will issue debts. Business valuation. Acquisition. Merger. What will happen? Not after acquisition. The scenario about what will be the case if the company invests in the acquisition of the business. Risk management. Forward. Futures. All about the futures. Working capital. Management. The topic is management. Do remember, this subject is not about past. This subject is about future. It's about planning. So don't confuse at any time. If we are doing something, for example, investment appraisal. For example, investment appraisal, we are calculating the NPV. And don't mess with this question. If this not happens, payback. If this not happens in the particular time, payback. No, we are just here to make a plan. And it is possible that when actual things happen, this is not according to the plan. But this is not our concern. The whole subject is about planning. Number two, this is first thing. Number two, your approach should not be as an accountant, but must be as an entrepreneur. If you appoint somewhere as a financial management, your mindset should be parallel with the chairman. Chairman means the owner of the business. For example, think, I'm giving you a situation. For example, if you appointed in a company, for example, you appointed in Toyota, and there is a meeting where at the meeting, there are three persons. One, the chairman of the Toyota. Number two, you, the finance manager. Number three, me, the accountant. I'm accountant. Chairman introduce a plan that we are going to launch a car. So you as a finance manager, what you will think, me as an accountant, what I will think. If chairman says that I have a plan to introduce a car, as an accountant, what I will think, if new product launch, what machinery will purchase. As an accountant, what should be debit, what should be credit, what will be the life of the project, what is the depreciation method. That is my scope as an accountant. But you as a finance manager, don't think in with that scope. You must think in a manner like the chairman, like the owner. What owner think about the future? Financial manager think what financial manager objectives. The financial manager objectives is to think about the future. Is to think about the future. Future means investment appraisal, source of finance. What do you think? We think in this manner. Finance, that is equity, that is debts. We will arrange the finance, invest, for example, non-current asset, invest, then return, income statement, return in the manner to meet the required return of equity holder and debt holder. Yes, the screen mentioning on writing is financial statement. Yes, this is financial statement, income statement, balance sheet. But the approach to study the balance sheet, income statement is different as compared to accountant. What accountant think for income statement, balance sheet? Accountant think recording of expense, recording of asset, recording of equity, recording of liability. But finance manager not think the balance sheet recording. Balance sheet, equity, debts, finance. Non-current asset, invest. Income statement, returns. That is the point where we say that we think as a finance manager, we must have to make an approach to think as an entrepreneur. This is what the examiner expectation. The students must have a mindset about future. The student must have to think like an entrepreneur. And for God's sake, leave this question. How much theory, how much calculation? Do remember, there are two categories of subjects with respect to calculation. With respect to calculation theory, there are two categories. In business studies, there are two types of subjects or topics, calculation and theoretical, both calculation and theory. Number one, some of the topics are that is calculation based theory, but some of the subjects are theoretical based calculation. You must say that, sir, what are you saying? What is the meaning of calculation based theory? Have you ever studied variance in F5? Yes, that is calculation based theory. Have you ever studied ratios and interpretation F7? Yes, calculation ratios based theory. But this subject, financial management, that is all about theoretical based calculation. Theoretical based calculation. Candidates, this is theoretical based calculation. It's not calculation based theory. So the key aspect, the essence of the subject are theory. So how can we get rid? How can we ignore the theoretical aspect? The whole of the subject calculation is based on theory. So please develop your interest to structure or develop your mindset about the theoretical aspects. Don't ignore it. But what is the way to approach or prepare the theory? We will discuss. So candidates, first thing about the examiner mindset is about theory. It's about study to approach the finance. How to approach to study the finance. That's the important thing. Furthermore, candidates, the second part of exam team, the second part of the exam team, it's mentioned that the second part, examiner particular mentioned that there are 7 part of the syllabus: investment appraisal, business finance, valuation, risk management, working capital. And candidates, these 2 are also the part of syllabus: financial management environment and financial management objective. This is not for 1 hour. This is the status is not for 1 hour. This is also the core part of the syllabus. Normally, what do you think? Investment appraisal is the core part. Business finance, that means cost of capital, core part. No. All the things are the core. This is the part of the syllabus. What are the weightage? We will discuss later. So this is what the syllabus area. You know very well about the exam structure. Section A, 15 OTQs, each having 2 marks. Section B, 3 OTQ cases. That's based on 3 questions, case-based questions, each having 5 objective tests. And section C, constructive response questions, 20 marks each. Candidates, section ABC, allocations. Section ABC allocations. What are the section ABC allocations? Examiner particularly mentioned that we can ask any part of the syllabus in the section A. Any part of the syllabus from the section A. Candidates, whenever you are preparing the section A questions, you have a least interest for the practice. You have a least, but this is a very critical point. You are ignoring that. No. And number 2, the way you practice the section A is very casual. You just randomly pick the answer. In Pakistan, we use the language Urdu, so-called tukka. but so we can say that just random pick the. No. If, for example, there is an MCQs and you are preparing 1, 2, 3, 4. During preparation, if second is right, you must have to prepare in a manner. If 1, 3, 4 is wrong, why it is wrong? Why it is wrong? It's a particular wording of the examiner. If the students are preparing MCQs, OTQs, and something is right, something is wrong, which 2 are true, which 2 are wrongs. So if identify, number 1, don't just cherry pick, don't just random pick. And if you pick right one, also identify why the others are wrong. Students, do remember, focus on quality, not on quantity. At the end of the day, you will qualify the exam. A lot of times student says that I have done 300 MCQs. I have done 500 MCQs, but I ask something. If you done 300 or 500, even 1000, it is only the matter of random picking, or you really, or with honesty, identify the solution why the right is right and why wrong is wrong. Do remember, if there are 7 part of the syllabus and you have done maximum 140 objective questions, including section AB, with that point 20 questions, section AB, OTQs, total OTQs, section 24 each syllabus area, not 300, 400. With that quality, that what is right, and if the things are wrong, why it is wrong, believe me, inshallah, Allah be willing, you will qualify your exam. Focus on, be honest with you, be honest with yourself. and make a quality preparation. That is the wording of the examiner. If FM are preparing, don't random picking the OTQs or case specific OTQs. Section A, OTQs. Section B, case specific OTQs, you know very well. Candidates in section B, our observation is that examiner most of the time examine these areas, but it's not mentioned anywhere. The examiner will in section B examine only these four. Rest of the things will not examine. But most of the time examiner major time examine these areas. We are observing these areas as well. These three areas including working capital. But as compared to these above four, the proportion is lower. But this is what an observation. You have to prepare all the aspects of the syllabus. So section B, section C. Section C examiner particularly mention investment appraisal, business finance, risk management. Sorry, no risk management. That's typing error. That is working capital. Section C observation, investment appraisal, business finance, and working capital. An examiner already mentioned in the reports as well. These are the core area that will examine in the section C. Candidates, this slide is very much important, and it's really the eye opener for you. It's really eye opener. Candidates, ask yourself, if you have spent 100 hours for preparation, please don't smile. Please don't laugh. If I say that 100 hours preparation, I know that you are sitting in your home or in office and you are just smiling what the instructor is saying. 100 hours. Let's suppose if you are spending 100 hours preparation for FM and your paper reflecting that 55 to 60% related to theoretical aspect and 40 to 45% calculation. I just leave the question to you. How much proportion of your preparation you have already done calculation and how much for theory? Can you please very honestly reply on the answer bar that how much time, if you already spend, for example, 10 hours, how much time you have spent on calculation and how much time spend you on theory? But whatever you have spent, candidates, whatever you have spent, do remember one thing, this proportion. Section A, since 2018, 60% of the OTQs, 60% means if 15 MCQs here, 9 belongs to theory. Out of 15, 9 belongs to theory. Same case for the 60%. Same for this 50%, 60%. Section B. And section C, observation 50 and theoretical. Candidates, do remember my disclaimer. This is what the observation of Hussain Qazi. Don't blame to ACCA. This is what the observation of Hussain Qazi. And this is really eye-opener for you. This is my analysis. 60% related to theoretical, section A. 60% theoretical, section B. 50% theoretical, section C. Please, the remaining time, whatever you have remaining time, you must have to prepare in the right direction. And don't ignore and don't get rid the theoretical aspect. Till what time you will actually, with the honesty, work out with the theoretical aspect? Don't ignore it. Yes, another very important highlights, candidates, very important highlights. And this is what read the mind of FM maker documents. These are the highlights. You know very well that section C, each questions have 20 marks. Each question has 20 marks. And the examiner particular mentioned that this is examiner point. Discursive part of question can be worth up to 10 marks. Means out of 20, 10 marks can be, and already done it. Examiner was already examined. So first thing, listen carefully. First thing, make up your mind that yes, theory is the core part of the syllabus. Second thing, we will discuss here how to write the theory. I will tell you what is the right way to respond to theoretical aspect. But make up your mind, yaar. Make up your mind accordingly, my dear students. Number two, another important thing. If we are working on the examination in the constructive response spreadsheet and something we have calculated directly to the calculation, for example, let's suppose inflated value of the residual value, or anything we have calculated directly in the calculator and put a directly figure on the spreadsheet and submit to the exam. Examiner will not call you on your mobile phone if it's become wrong. Can you please tell me how to calculate it? Or examiner will not calculate for you for your purpose. If you have calculated something wrong and write it down accordingly, then you will get 0 marks. But if you have done something wrong with the supportive working and your supportive working having some right direction, you will get some mark. That is what it's mentioned, examiner. It is not the task of marker to rework candidate's answer. No marks will be awarded something wrong calculated without supportive workings. For God's sake, if you are working of the investment appraisal or anything, don't ignore the supportive working. Do the supportive working. Particular mention. Do not waste your time for unnecessary workings. It is both for calculation and theory. For example, in investment appraisal, you will mention sales, you will mention variable cost. One raw sales, one raw variable cost. Then you net the figure and write the answer with the formula contribution. 0 marks for contribution. No marks. Sales, variable cost, fixed cost, tax payments, that's all. The step of contribution having 0 marks. So why you are putting the energy? That's a theory point. Unnecessary working. If you are working the full formula of the IRR on the spreadsheet, unnecessary working. Smart working can get within a 30 seconds you can calculate the IRR. Unnecessary working for whole formula. Same case for theory. Unnecessary working, avoid. What do you do that? If examiner asks you, for example, what is your advice about the director statement related to investment appraisal about new project? I repeat, if there is a question that what is your advice about the new director's new projects working related to phenomena? Now you are going to start the answer. First you copy the answer. Sorry, you copy the question. The director's statement about this. What you are doing? If something already mentioned in the question and you're repeating that question on your answer, you will get 0 marks. You're just wasting your energy. Avoid unnecessary working. Furthermore, do remember one thing. There is no negative markings. A lot of time students ask from us. Sir, if we are working something and that's become wrong, first thing is wrong, and the first thing based on the second step, what will happen? No negative marking. No negative marking about it. There is no negative marking. Candidates, these are highlighted, important highlighted point. But I strongly suggest you must have to read the complete article about reading the mind of the FM maker. And this is the link. This is the link here. And we strongly recommend you to read the last 4 examiner reports. I've also mentioned the link here. If you people really convinced with my point, whatever I have discussed with you about the direction you have to make, you must have to be committed and don't delay. Just ignore all the things about the preparation and first read the article and examiner report. Are you getting my point? What I'm saying? Are you getting my point? What I'm saying? You must have to reply on the answer bar. Yes, what's the point? If you have any question till now, you can ask. The link I've already shared with you, candidates. You can find the article, don't worry. At the end of the session, we will share you these all documents with you on the WhatsApp group, and you can just copy paste the link on the Google bar. You can find the article and you just find out from the Google as well. So candidates, now this is the first phase. This is the first phase of the today's session, and this is really your eye opener related to the direction, directions I'm giving to you about how to prepare the exam. So candidates, this is the session that's called Prepare to Pass Financial Management March 2020 exam. I am Hussain Qazi, your facilitator, and we are here to provide you full support related to the FM exam, upcoming exam, December 2020. Now, candidates, based on our discussion, we will try to make the practice of the questions. First, briefing of the question. Number 2, practice of the question, considering the examiner mindset. So are you people ready for this? Yes, definitely you people are ready. You people are here for this purpose. Now, the topic is investment appraisal. Candidates, before starting the topics, I'm going to clear once again the things. For each topic, we will discuss initially the briefing of the topic, number 1. Number 2, some exam practice question considering the examiner mindset. Okay, first topic is investment appraisal. Candidates, the most important thing is that investment appraisal is the topic having the exam scope, 15 marks to 25 marks. Sir, how 15 to 25 marks? How? Yes, that's a good question. How? Because it may be the part of section C, of course. It may be the part of the section B, and it may be the part of section A. So examiner may make a combination of section ABC, and the scope belongs to 15 to 25 marks. Another point, candidates, very important thing. Sir, is this the only about calculation. Once again, you are making the mistake. No. This is also, yes, major part related to calculation. I do agree. But examiner makes a combination calculation and theory. I can say that that's a proportion of calculation, theory, investment appraisal. The calculation belongs to 60 to 70 and theory 30 to 40. But there is no rule, huh? There is no rule. It may possible like that, but till 40% more, and maybe sometimes maybe possible more than 40%, but 40%, till the 40% you can get the theory as well. But don't fear about if you are working with me and follow my direction, you must have to get rid the fear about the theory, huh? In Pakistan, our Prime Minister says, get rid from the any fear. That's called get rid any of the fear. That means the ghabrana nahi hai. So that means no fear. Candidates, no fear about theory. From now onwards, all of you must not have to make any of the fear about the get rid from the fear of the theory. What will happen? First time you will be wrong. Second time you will be wrong. Third, fourth, then what will happen? So no issue at all. If you just make an experience of theory before the exam, after that what is going on in the exam, if you experiment first time in the exam about the theory, that nobody will qualify the exam. So practice or prepare your exam according to exam standard. And candidates, don't worry about that. About the handouts, for the supportive handout already shared with you on emails, but don't you worry, after the session the supportive handout and all the classwork handout will hand over to you through the WhatsApp group. Don't worry. You will get I've already shared the WhatsApp group with you. I will share once again with you. Don't worry. So this one is the point. Now start with the topic. Now what is going on? A briefing on the topic. A briefing of the topic. Candidates, investment appraisal. What is the topic about? You know very well, investment appraisal in FM about decision making on a long-term basis. You have already studied the decision making in F5, but that was about short term. Here the decision making on a long-term basis. You people know very well about that. What is the objective of financial management? The financial management objective is to maximize the wealth of shareholder. And to maximize, for the sake of maximization of wealth of shareholder, we need to identify the investment opportunity and then arrange the finance. Once again, for the sake of maximization of wealth of shareholder, we need to identify the investment opportunity, and for this investment we have to arrange finance. But the finance topic tomorrow. Today's topic, investment. What is the purpose of this? What is the purpose of today's discussion? To maximize the wealth of shareholder, we need to evaluate that either this investment we have identified or chosen meets the requirement of or meets the expectation of financiers. That simple means investment appraisal. Why we are appraising the investment? To assess that either this investment really meets the financing requirement of financiers. That's debt holder, equity holder. So what is syllabus about? The syllabus about what? The syllabus about number one, investment appraisal. There are 4 techniques for investment appraisal. Number one, discounted cash flow technique. Number two, internal rate of return method. Number three, payback. Number four, accounting rate of return. But this is what, whenever you do with the practice question, this is journal decision making, journal, machine, to buy the machine, to launch the product. These are very standard and journal. Some specific decision makings, that is asset replacement decisions, asset replacement decision, capital rationing, lease or buy, that is financing decision, by the way, not investment. So these are the core syllabus areas. What is this about? We will discuss over the period of time. Next point, that is risk and uncertainty. Number one, very important, the theoretical aspects, risk and uncertainty. Sensitivity analysis, very core. And other method, for example, simulation method, payback method, expected value method, different methods. This is what the core syllabus areas. Candidates, once again, very important point. You must not only need to know about the calculation, but also about the theory. What I have observed, examiner very much concerned about specific 3-4 points about investment appraisal. Never forget, you have to prepare at least for this. Examiner expecting that your constructive comment about the financial acceptability or rejection of the project. Acceptability or rejection. If there is an investment appraisal question, calculate the NPV. Calculate the NPV and recommend the strategy. Recommend the strategy. So there is another marks for calculation, another marks for recommendation. Normally, what do you recommend? Accept the project. If there are 2 marks for recommendation, your wordings accept the project or reject the project, positive NPV, accept the project, you will not get the marks. No. If you just mention negative NPV, reject the, no, you will not get the marks. Marks are not available in the exam to spread out or just to distribute. We should have to eager to get the marks. We should have to make approach to get the marks. So this is normal attachment, advice about the investments. Number 2, capital rationing reasons. That's another point. IRR limitations, risk and uncertainty. These 4 areas you have to very much confident what to write, and we will discuss here as well, and more. Candidate, this is what the document you people already have, and we will discuss the investment appraisal aspects accordingly, working the investment appraisal topic and all other topics going forward in the next session, but all the topics based on the expectation of the examiner. Now, for candidates for investment appraisal, there are 3 articles available. There are 3 articles available, and you people have to read these articles. All these articles. Don't ignore these articles. Now, candidates, one moment, please. Now, candidates, it's time. for the working related to some questions. And you people have already some questions. The documents I have already shared with you, and the document includes a question that is argal. We are now going to start for this particular question. This question is belongs to December 2015. That is December 2015. And this one is the question. Candidates, this is an investment appraisal question, but you can watch this question. Although in December 2015, one moment, candidates. Okay, candidates, move on. Candidates, before starting this question, first of all, you have to observe the very important thing. This is 15 marks question. You know very well from September 18, from September 16, the exam patterns become changed. But before that, the questions were about the 15 marks. But it's good question to approach to identify the things accordingly. Now, number one, requirement. Using the nominal terms NPV approach, evaluate whether purchasing the new machine is financially acceptable. The first thing. Number two, in A part of the question, the term use evaluate. The term use evaluate. The very important thing is that the term include evaluate means the major part related to the calculation. The major part. And then conclude the answer about the acceptability. But the B part, the term mentioned discuss the reasons why investment finance may be limited, even when a company has attractive investment opportunity available to it. Number two. So if we are going to attempt the question, we have to balance the time and balance the solution between the calculation and theory. Of course, we will start the working with the theoretical calculation aspect, but the enough time must have to spare for the calculation theoretical aspect as well. If 5 marks theory and 10 marks calculation, that means 33% time must have to spend for the theoretical aspects. So I must say that you have to practice in a manner to allocate the time accordingly. Okay, I'm going to start this question, but before this question, I wanted to make a quick review about something. Just a quick review. Candidates, you know very well, whenever investment appraisal by discounted cash flow method. So some very important things you need to consider. Some important calculations you are facing. Number one, you are facing the term nominal and real. A quick review about the topic. A quick review, huh? You know very well that what is the how to calculate NPV. NPV is based on two things. Number one, future cash flow. FCF is future cash flow, and discount rate is the required return. There are two methods for the working, either the nominal method or either the real method. What is the meaning of the nominal method? Nominal method means your future cash flow must be nominal and discount rate must be nominal and calculate the NPV. Real method means your future cash flow must be real and discount rate must be real and calculate the NPV. By any of the method, you calculate the NPV, either nominal method or real method, the NPV becomes same. But important thing is that if I say that the term future cash flow, and first thing, what is the meaning of real future cash flow? And what is the meaning of nominal future cash flow? Do remember one point. Either real, either nominal, both are future cash flow. But future cash flow in real terms means that the cash flow will arise in future, but the prices are in current terms. That means not inflated. Nominal future cash flow means the cash flow that will actually arise in future and it's inflated. It's inflated. If the future cash flows are nominal, that's inflated. If the future cash flows are real, that is future but not inflated. That's important. For example, let's take an example quick. I'm going to sell. I have a plan to sell the markers in the market. Markers, board markers. And I have decided a price of 100. 3 years project, year 1, 2, 3. Year 1, year 2, year 3. I have a plan to sell the marker with the price of 100. With the price of 100. But these all are current price terms, CP current price terms. I can inflate with 10%. So number one, this is future cash flows, 100, 100, 100. But this is current price terms, not inflated. Not inflated. But what I say, I will sell the markers 100 in current price terms, but need to inflate. That means nominal price. In year 1, that is 110. That's 100 multiplied by 1.10. Then 121, then 130 something. Candidates, very simple as this, but you people are confusing sometimes. What is the point of confusion? Listen carefully. You must remember one statement of mine about the nominal future cash flow. Nominal future cash flow means the cash flow actual arise in future. The cash flow actual arise in future. that will actually arise in future. Either it's inflated or need to inflate. Once again, whatever the cash flow actual arise in future, that's called nominal. Either inflated or need to inflate. This 100 need to inflate, that's become nominal. All these. But if I say that you have a car and you have a plan to sell it at year 3 with the realizable value of 1.2 million. Once again, answer me on the answer bar. Answer me on the answer bar. You have a car, you have a plan to sell the car at after 3 years by 1.2 million. Is that nominal or real? You have a car, you have a plan to sell in the future with 1.2 million. Candidates who are saying nominal, absolutely right. What I say that the cash, what is the meaning of nominal? The cash flow that will actually arise in future, either already inflated or need to be inflated. My second example about car, already inflated. So actual cash flow, you have a plan to sell 1.2 million. That's actual cash flow. And the markets now 100, but year 1, 110, then 120, 133. That's about the nominal cash flow that will actually arise in future, but need to inflate. So this is the critical point. You people are going to mistake here. Whenever the examiner mentioned the cash flow about particular year that actual arise in that cash flow, that will be the actual cash flow arise in future. That is important. That is the first point. Okay, the first critical point, the first thing is nominal and real. Candidates, you know, very well important some another points. For example, taxation. What you must have to know, what you must have to know about the term taxation. Number one, you must have to know about the taxation that taxations are real cash flow. Taxations are real cash flow. Any of you people have a confusion, um, don't be fair and don't worry about that. We will reply you accordingly. Either break time, after 15 minutes I will take a break, or after the session you can ask me on the WhatsApp group. I will share you the WhatsApp group link. Don't worry, Ram. So not to worry, just listen carefully and parallel with the sessions. Taxation. What you must have in your mind about the taxation? Taxation means taxations are a real cash flow. If we have any plan for the investment, the consequence of the taxation must have to consider the consequence of the taxation in the case of payment, in the case of saving. For example, if we are going to invest, for example, if we are going to invest and we will get some earnings, for example, contribution or the profitability, then we have to pay the tax. So taxation, we have to pay either same year or it's delay. Any of the point? Same year or it's maybe the delay. Second important thing, the very important thing is that tax depreciation allowance, TDA. Do remember, it's a tax savings. How to think in a manner. Tax depreciation allowance means, number one, if we are going to invest in the machine to produce some goods, so number one, purchase the machine is a cost, and we go to the taxation, we go in front of the taxation team and discuss the point, ask them to allow these expense in taxable income. If they allow the tax, our taxable income become reduced and we will save the tax. So tax depreciation allowance means, number one, depreciation is a non-cash item. Depreciation is a non-cash item, but tax saving from depreciation is a relevant cash flow. Maybe the same year or delayed. So that's the important thing. That's the taxation. Number three, working capital. Do remember one thing, working capital, no tax effect, candidates, no tax effects. Working capital is finance injection, but we will not consider as a tax effect. These are the aspects you people have confusion. That's why I'm discussing. Working capital has no tax effect. Always tax is applicable on savings, earnings. This is financing, no tax effects. Okay, rest, what is about the working capital? For example, if we purchase the machine, so investment of 1 lakh, let's suppose. So investment of machine, 1 lakh investment. But to run the machine, we need some more finance. That's called working capital. So we inject working capital in that manner. For example, working capital 1000, inject air 1. If we required 1100, if we required total 1100, we will inject 100. So that means total is 100. Working capital total and working capital incremental. 1000 total, 1100 total. But the relevant cash flow, relevant RCF, relevant cash flow is incremental. This one. For example, required 1500 total. Already injected 1100. Incremental will be 400. And we will assume that at the end of the day, if examiner mentioned that, all of the working capital will inflow. That's become inflow. That means you lift up the product from the market and all of your finance will be covered from the market. That's inflow. No tax effect, and incremental always the relevant, not the total. Yes, we can put the working capital after the taxation working. It's a safe side because otherwise you can mix it. Waqas Akram asked that working capital calculation after tax. Yes, we can put the working after tax, but do remember working allocation anywhere, but no tax effect. So this one is the working capital aspect related to that matter. Some more important points. Listen carefully, candidates. This is a very critical point. NPV finance injected from debts holder and equity holder. I repeat, NPV financing from debt holder, equity holder. How to calculate NPV? Future cash flow and discount rate. Listen carefully. We are calculating the NPV. We are calculating the NPV in a manner that this investment project future cash flow meets the required return of both financiers. Required return means debt required return are interest, equity required return are dividends. Do remember one thing, this interest and dividend is the part of discount rate. It's a part of discount rate. It's never part of future cash flow. You will never put the interest or dividend in the future cash flow columns or rows. It's never ever possible. Future cash flows never include interest and dividend, but discount rate, yes, discount rate includes the part of interest and dividend. It's by default, it's a part of the WACC. That's KDKE. But for investment appraisal purpose, it's not relevant. So we can say that interest and dividend are not relevant cash flows. Not relevant cash flows. Last point for a quick review. You know very well about that. Last thing. After that, we will move for the question. Very important thing. About discount rate, that is Fisher effect. 1 plus n is equal to 1 plus r multiplied by 1 plus inflation. This is nominal discount rate, nominal or money discount rate. This is real discount rate. This is general inflation. Do remember inflation having two categories. G for general, S for specific. Specific use for future cash flow. General use for discount rate. General inflation. Investors are concerned about general inflation, not the specific inflation. General inflations. Candidates, we have already discussed this point. If we are working with respect to the NPV, future cash flow, either nominal or we are going to put nominal. So discount rate also required nominal. So if we need to calculate a nominal by this formula, or future cash flow real or discount rate should also be real. So if we need real, we can identify the real with this formula. So it's a very simple formula to work out and working accordingly. Okay, candidates, now move on for the question, a quick working of the question. I'm giving you just 15 to 20 seconds to read the question accordingly. Original company having a question, read the question. You have this question on the question bank. That's I've already shared with you. Read 15 seconds, read it quickly. Then we will solve it on the spreadsheet. With the question, more things will be clear. Don't worry about it. Okay, now I'm going to read this question. If you people have confusion, the confusions will be clear with this question as well. That's why we are doing the question. Okay, class. Argnil company is appraising a purchase of new machine. Purchase of new machine costing 1.5 million. Replace existing machine becoming out of date and has no resale value. Forecast level of production and sale of goods produced by new machine has a maximum capacity 400,000 units per year as follows. Sales volume 350, 380, 400, 400. This is volume. New machine will incur fixed annual maintenance cost 145,000 per year. 145 per year. Variable cost expected to be $3 per unit. Selling price expected to be 5.65 per unit. The cost selling price estimates are in current price terms. Mention that these are real. Do not take account of the general inflation, which is forecast 4.7% per year. Here, examiner mentioned that the general inflation for selling price and cost will be used. Normally, examiner may mention some specific for cash flow. If a specific mention cash flow for specific inflation for cash flow, use the specific. Otherwise, examiner will mention the journal. It is expected that new machine will need replacing 4 years time. So duration is 4 years. Advance in technology, the resale value of the new machine expected 200,000 at the time. Future value term. Candidates, listen here. Resale value new machine expected 200,000. Future value term. Can you please reply me? The resale value, is this nominal or real? The 200,000 will actual arise in future. This 200,000 will actual arise in future. That's why it's nominal. It's nominal. The purchase price of new machine payable at the start of the first year of the 4-year life of the machine. Working capital 150,000 already exists and start of the 4-year period due to the operation of the existing machine. This investment in working capital expected to increase nominal terms in line with the inflation. Investment in working capital expected to increase with inflation line. Okay. Argyle company pays corporation tax 1 year in arrears at an annual rate 27%. Claim 25% reducing balance tax allowance depreciation purchase price of the new machine. Company has a real after tax weighted average cost of capital 6% and nominal after weighted cost of capital 11%. Examiner mentioned that using nominal terms. So it means, do remember, we are working for NPV with nominal. So we need discount rate nominal. And we need future cash flows. One of the cash flow already nominal, that is residual value. But some other need to nominal. That's the point. Okay, now start this question on the worksheet. Now start this question on the worksheet. One moment, please. One moment, please. Okay, you have the question. Expecting that you people are question in front of you on the system or the hard copy in front of you. Okay, now start the point accordingly. First of all, investment appraisal. that is belongs to 5 years matter. Year 0, 1, 2, 3, 4, and 5. Okay. So first of all, whenever you work out on the worksheet, some things you need to consider that with respect to the exam point, your working structure must be very much clear. So you have to put the matter investment appraisal 0, 1, 2, 3, 4, 5, and you have to put the workings. Number one, the sales revenue. Number one, the sales revenue. Number one, the sales revenue. We will mention the sales price, and sales price mentioning on the question paper with the inflated value. How much the inflated value? At the rate here mentioned that 4.7%. That is 4.7%. Yes, that is year 1, 2, 3, and 4. I'm expecting that all of you people are with me, and you must have to solve the question on your system. It's ideal. Okay, so number one, you have to mention the function is equal to sum. That is the price related to the first price, that is $5.65 multiply by 1.047 and power 1. You can mention simple 1.047 just a moment please. Yes, candidates. Okay, candidates. I think so. We need to take a break for the session. Take a 10 minutes break, and after that we will start this question accordingly and conclude with the theoretical aspect. So break for 10 minutes. Take a break for 10 minutes. 10-minute break from now. Take a 10-minute break, candidates. Yes, I'm going to share the WhatsApp group here right now. One moment. Okay, candidates, now we are going to live. Be attentive now. Now we are going to live. Be attentive now. Can you all please show me your attendance? Show me your presence now. I'm going to live again, once again, once again, once again. Hello, 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 everyone. Hello, hello, everyone. Be energetic. Yes, come on, come on. That's good, that's good. Present. Hello, sir. Yes. Hi. Hi, Faisal. Hi, Aisha. Present, sir. Yes, Mohammed Faisal. Hello, hello. Excited. That's good. Present. That's good, that's good. Hello, everyone. That's good. That's brilliant. All of you must have to be committed and be energetic. Be with me. We are here. The whole ACCA team are here for the sake of that you people must have to qualify your exam. Inshallah, we are providing a full support to you within the session, and I will try that after the session as well. And you people have any of the queries, Nabil, I will reply you accordingly during the session. All this thing matter. Okay, let's move on. Candidates, before starting the session, one question you people asked with me before the break, that do remember one important thing, that do remember, if I ask you that the company is going to start a project, so is it necessary that project is definitely start at financial year start? No, it may be possible that project will start during the year or at the end of the year. It may be possible that project will start at the end of the year, during the year, or mid of the year. But do remember one thing. In the history of F9, in the history of FM, examiner have never mentioned that when the project is start. I mean the date of start. So now, important statement to be remembered, that must have to remember. Project start means year 0. And always assume that if nothing is mentioned in the question, that are standing at financial year start. Are standing at financial year start. Once again, do remember what? Do remember that project start means year 0. Project start and year 0, same meaning. Always assume that this is financial year start. For example, if 2019, that is 1st January 2019. Do remember that point. We will always assume, if nothing is mentioned, that our project start at financial year start. So let's suppose I'm saying that we are standing at our project start now, and now is 1st January 2019. Hence, mention that sale price at financial year start 1st January 2019 terms. 1st January 2019 terms, financial year start terms, financial year start current price terms. So that means it's in real terms. It's in real terms. In this question, what examiner mentioned in this scenario? Examiner mentioned the purchase price of the new machine payable at the start of the first year of the 4-year life. So what does that mean? Whenever we will start the project, that will be the start of first year, means financial year start. So do remember that point. It's never confusing about that when the project will start. We will always assume it's not, even if this is not mentioned, that still assume that project will start at the financial year start. That's all. So the point is that if, do remember that point, project start date means year 0. And if it's nothing mentioned, that means project start at financial year start. Okay, now move on. Candidates, do remember one thing. If you people have any confusion, you can ask me after the session WhatsApp group. The session videos are available, freely available on the video after the session on the ACCA Vimeo side. You can just watch the videos again and again, and still have any confusion, you can ask me anytime. So now start accordingly. Now complete this question quickly. We have to do a lot of things more on the working. Yes, the question about quickly. Sales value, sales price, quickly. Write me. What is the sales price? That is it 5.65? Yes, this is 5.65. Inflation 1.047. That is power 1. That is power 1. So that means if, oh, sorry, it's is equal to sign. Oh, sorry. Is equal to, make it quick. The price, that is 5.65 multiplied by bracket 1.047, that is power 1, and this function should be quickly copy paste and change the power. Yes, do it quickly. Don't write again and again. Make it quickly. Yes, 4. Same case, variable cost. What is the variable cost per unit? Please engage with me. What is variable cost? Otherwise you will get bored, and I want this interactive session. 5.65. Next one, variable cost 3 multiplied by 1 point, same inflation rate, please, with 0.47 power 1. Oh, 3.141. Yes, control C, control V. Yes, power 2, control V, power 3, control V, power 4, 3.65 accordingly. Yes, is equal to, we just make a contribution. We can calculate a contribution, B15 minus B16. That's contribution. C15 minus C16. D15 minus D16. That is contribution per unit. It's simple. Contribution per unit. And we just make a unit here. Save your time and just put the units. 350,000. Then 380,000. Be with me, please. It's better to practice on the B17 into B18. We direct put the matter on the contribution. P17 P17 P18. Yes, how much the time for the project? That is for the 4 years. That is for the 4 years. Yes, that's simple contribution. Yes, candidates, do remember one thing. Do remember one thing. What I do? I do calculate contribution per unit. I do make contribution per unit. Yes, there is a question of the Muhatir Siddiqui. It is important to calculate contribution per unit. Do remember one thing. Whatever whatever you do, save the time. Not necessarily the structure is sales minus variable cost. If you save your time, just calculate contribution per unit, multiply by units, put it accordingly. There is no specific separate marks. There is no specific separate marks for the complete sales revenue and variable cost. But yes, sales price, variable cost working is enough. So it's also acceptable. And your working is also acceptable. Yes. Furthermore, maintenance cost. Yes, please be with me. Maintenance cost. What about the question says? What about the question says about the maintenance? Maintenance, yes. Maintenance, 1,45,000, and that also need to inflate it because it's mentioned all the costs. Mention cost and selling price. Cost means variable and selling price. Yes, do it. Maintenance cost, once again, 4.7% is equal to 1,45,000 multiplied by 1.047 power 1. Yes, how much is the value? 1,47,000. Yes, how much is the value? Yes, do it accordingly. Over to you. Yes, over to you. Yes, tax matter. What is the point of the taxation? Same year or delay? Reply me. Same year or delay? 1 year arrears. Yes. 1 year arrears. C3 minus C4 is equal to C3 minus C4 multiplied by tax rate equals to 0.27. 0.27 is equal to C3 or 0.3 multiplied by C3 minus C4. Nine seven one 092.5 minus 151. Okay, 0.27. Sorry. Yes, candidates. Yes, for the time being, working accordingly. Make it quick. That's value about the tax matter approximately 222. Yes. It's approximately 222, or it's 1 year delay. And then 255, 285. And last one, 297,000. Quickly working on the calculation. Otherwise, we are working on the next accordingly. Yes, workings, sales price. Next point that's related to tax depreciation. Yes, tax depreciation. So number one, tax depreciation working. How much bank? How to work on the tax depreciation? If we work out according to tax depreciation, so the first way to work out accordingly, year one, 25% reducing balance method. So we will work out accordingly 25%. Very simple. The machine costs 1500,000 into 3,75,000. Reducing balance 3,75,000. Next, 375,000 multiplied by value 0.75. 375 into 0.75, 206,250. 206,250. 375,000 into 0.75. I'm sorry, 281,250. 281,250. Next, 211,000 approx. And last one, you know that's a figure, remaining balance. And the remaining balance equals to what? If you're working accordingly, tax allowable depreciation. So that's equals to number one, 1,500,000. 1,500,000. And if we sum of all these figures, that is 375,000 plus 281,250 plus 211,000, 867, 250. You will mention here, and minus the residual value. How much value? The residual value. The residual value, it's 200,000. So is equal to sum H20 to H22. And that's remaining figure. That's 432,750. Now the working of tax savings. Now the working on tax savings. Yes. How much the percentage about the tax savings? That's equals to 27%. But 1 year delay. That's 375,000 into 0.27. That's equals to 101,250. And we can put the figure direct here as well. No need to mention here. Directly you can mention the working here. 101,250. And then approx next one 281,250 into 0.27 759. That's 76,000 approx. It's all approx working. 57,000. And last one approx 117,000. And this is what tax saving. Last point, that is candidates working capital. Then we will move for the theoretical aspect as well and internal rate of return. Working capital. What the working capital says in the question, candidates must be with me. Working capital investment 150,000 will already exist at the start of the year. Already exists at the start of the year. Due to the operation existing, working capital investment of 150,000 already exists start of the year. So that means this working capital is a part. I mean this investment will already exist at the start of the 4-year period during the operation of existing machine. That's 1.5 million includes. And now it's become inflated over the period of time. So it's become inflated by 4.7%. That is 4.7%. So how much the working capital requirement accordingly? Last point for the working capital. Just a minute. Year 0, 1, 2, 3, 4. Year 0, that's 1,50,000. Do remember, it's a part. It's total. It's working capital total. Candidates, it's total. But we need incremental. We need incremental. and inflated by 7%. Sorry, 4.7%. So how much value? 1,50,000 into 1.047. That is 157,000 candidates. $1.047. Is equal to 150,000 into 1.047, 157,000 into 1.047, 164,000 into 1.047, 172,000. And last one, approx 1,80,000. Okay, so first one is incremental 7,000. You can direct put here. Then again 157.64, that's approx 7,000. And then 8,000 value. 8,000 and last one is 8,000. So working capital amount 7,000, then 7,000. Yes, candidates. This one is the total figure. Last one is the residual value. We have to put number one investment. G. Yes. Do work out me what is the value of investment. Investment that's equals to 1,500,000. And its residual value. That equals to 200,000. And that is, you can put accordingly the value of the net cash flow then discount rate and then present value. And finally calculate the NPV. This is what the point you can get. A simple sum up the points accordingly with the values and then calculate the NPV. I'm sharing, just calculate adding the net cash flows. I mean, sum up the net cash flow with the minus values and discounted present value and calculate the NPV. It's a very simple NPV. You can calculate it accordingly. Working about the working. So now this is what the final working structure as well. The NPV you can calculate accordingly because we move to another questions as well. That's equals to 1122. You can check your answer accordingly. Some questions you have. Number one, the first question, Arsalan Khan mentioned that the investment. Sorry. The working capital start with year one, not this one. Okay. Okay. Candidates, you have to review the question importantly. Number one, for two things. Listen carefully. Here the mention that the working capital investment 150,000 will already exist at the start of the 4-year period due to the operation of the existing machine, which means that, listen carefully, why we haven't taken the working capital here. Very important point need to consider here. Listen carefully. What is the question about? The question is about replace the existing machine. Listen carefully, candidates. Replace the existing machine. What does that mean, candidates? What does that mean? It means that a machine already in the system, and the working capital related to machine working capital already injected, and we need to replace the machine. Means this machine should be out and replaced with another machine. So that means previously the working capital already injected here. Number one. So we are not here to discuss about that. Okay, we are expanding the operation. Listen carefully, expanding operation, and for this we need one more machine. Here we don't need one more machine. We just replace the existing one. Our setup are not enhancing, but existing one. So previously the working capital exists already the part, number one. So that's why at year 0, no working capital. Number 2, the second important point, year 1, 2, 3, 4, no at 0, but inflation, let's move on. So move on means if new replacement and inflation going on, then we don't need to add on, we don't need to add on year 0 the working capital, but we have to put the working capital increment due to the reason of inflation. This is inflation. Final point, sir, why you have not taken working capital at this point? Normally we represent inflow the working capital. For what reason? That we will withdraw the product, but here there is no withdrawing anything. Our setup is still continued. So do remember one point, working capital will inflow at end of the project if become ended. If the project become ended, if the project is not going to end, it's going on, then the working capital will not withdraw. So this is the most important point you have to consider. One last question you people ask that, but before that I have to work out accordingly. The very important thing, candidates, here listen carefully. All of you must have to listen carefully. Candidates, You said that what discount rate we need to take. Yes, the discount rate we need to take here, the nominal term, the nominal WAC 11%. We will discuss the point WAC tomorrow, but do remember one thing. WAC is by default after tax, either real either nominal by default, because in WAC formula 1 minus t exists. Here the case, no real but nominal. Now candidates, another point. Listen carefully. You have to bear in your mind the solution with examiner expectation. The solution with examiner expectation. Here the marking scheme. This is your marking scheme. If you done sales income contribution, you have 2 marks. If you done maintenance cost, you earned 0.5. If you have some mistakes you have done, leave that point. One mistake never impacts. Some steps mistake never affect on other part. Tax liabilities, timings, tax allocation, additional working, residual value, present value, and evaluation. That means decision. You have to write a theory that yes, in this case, the NPV is positive, so the replacement of the machine suitable for the business model or financially viable, having 1 mark. But candidates, now listen carefully. Another important point, candidate, another important point. You have to consider, very important. One very important point you have to consider. What I told to you. I told to you, you have to balance your answer with calculation and theory. There's a theory here. Discuss the reason why investment finance may be limited and company has attractive investment opportunities available to it. Even the company have the opportunity. What is the question about? The question is about 5 marks question. The question is about capital rationing. Question about capital rationing. But make up your mind how I will get these 5 marks. The word discuss. Whenever examiner asks the term discuss, do remember one thing. Do remember one thing. Discuss. The term discuss, huh? Initially, you have to introduce first thing. Introduce the topic. Whenever examiner asks you discuss, first 2 lines for introduction. For example, if you identified that this is capital rationing, so out of 5 marks, first mark is about what is capital rationing. Then further drill down. Why in discussion, why capital rationing arise? Hard, soft. Now start with hard, then soft. First of all, prepare your mind. This is 5 marks question. Your mind says 1 mark for startup and 2 marks for hard capital rationing, 2 marks for soft. You must have to, you people must have to make up your mind before starting what to write. Like, make up your mind, whatever you calculate, make up your mind accordingly, specifically for theory. Now this is the answer. This is not candidates revision good answer. This is the suggested answer for you guys, for your support. First, the meaning. Theoretically, companies should invest in project with a positive NPV in order to maximize shareholder. Means as a finance manager, we have a responsibility to identify the project to maximize the shareholders' wealth. And for this, if a company has attractive investment opportunity available, positive NPV, it will not be able to maximize its shareholder wealth if it does not invest them. For example, because investment finance is limited. This is what about why capital rationing arise. Also, we wanted to maximize the wealth, and we have investment opportunity, but the finance is limited. Finance limited, hard means external reasons. Hard means some external reason. Soft means some internal reason. But do remember, if you know a lot of things about hard reasons, but do remember, be smart. Only 2 marks available for hard and only 2 marks available for soft. If you know very well, control your mind. Just put 2 points. Number 1, company seen too risky. External reason by potential investor, for example, bank. For example, because level of gearing. If bank think that you are too risky because your debt ratio is higher, bank is reluctant to pay you more finance. That's external reason. Your economy is depressed, financial crisis, economy depressed, stock market depressed, not the right time to issue shares. So your finance will be limited. Some internal reasons, soft. For example, management don't want to make more fixed interest payments. Management matter, don't want to arrange debts. Management don't want to issue share to dilute the earning per share, soft. Candidates, are you getting the point? How to write the answer here? How to write the answer here? Don't worry about the capital investment appraisal, how to fix the 7,000 like this. I will reply you accordingly. It's a very tiny matter. How to work out accordingly. I will reply you after the session, even after the session. Don't worry about it. That is the point. Candidates, now move forward. Move forward. Another important thing. I have shared you another question. Another question, candidate. Another question. Why in? That is March, June 17. March, June 17. This is the question. I'm not going to attempt this question accordingly, but the way of the style of the examiner for NPV. Now, this is what the 20 marks question. Listen here. Listen carefully. We will practice one more investment appraisal question later on. Don't worry. But try to understand the way to move for the exam. This is the question of investment appraisal. 20 marks. And you will face also the 20 marks. 8 marks related to discuss. 3 marks related to discuss. 9 marks related to calculate. I'm not saying that calculation is not important. But 11 marks related to theory. The first thing, discuss difference between risk and uncertainty, 3 marks. Once again, discussion about risk and uncertainty. Whenever you ask the term discuss, you have to focus the topic. The topic is about risk and uncertainty. 1 mark will be available for introduction of the introduction line. Introduction line, 1 mark. And then drill down your answer. Means 1 mark for risk, 1 mark for uncertainty. Listen here, like this. Part A, examiner expectation. Explain risk, explain uncertainty. What's the difference? Clear 3 marks. Means if after the session, if you are going to any question, prepare your mind for 4 marks question, 5 marks question, theory. First of all, plan your answer. Plan your answer. Plan your answer. What should I write? 3 marks. Risk 1, uncertainty 1, the difference 1. Here, the term, what is the meaning of the term? You know very well, risk and uncertainty are interchangeable word. It's all about future. Whenever we are planned for future, there is some risk or there are some uncertainty. Both are interchangeable. But risk means that we are doing some work where we have some experience or where we have some probability. But uncertainty means we are going to do for work, but having no previous experience, no probability. So future planning without any probability, that means uncertainty. Future planning having some previous experience, having some probability, that means probability, that means risk. That is the point. Number one, introduction line. Always put introduction. The term risk, uncertainty often used interchangeably everyday discussion. However, there is a clear difference between them in relation to investment appraisal. Then risk refer to situation where investment project has several outcomes, all of which known and have probabilities can be attached. For example, basis of past experience. Risk therefore be quantified. Having past experience, quantified, measured by variability returns. Uncertainty refers to situation where project has several possible outcomes but no possible assigned probabilities. So no possible say to the outcomes occur. Categorically, examiner asks difference, you have to put. Whatever he asks, you have to put the answer. Yes, difference between risk and uncertainty is that risk can be quantified, whereas uncertainty cannot be quantified. So this one is the point. Once again, and the risk uncertainty, it's an important point for March 2020 exam. Critically discuss how risk can be considered in investment appraisal process. Be more drilled down with respect to risk. Discuss, then critical discuss. What is the meaning of the term critical discuss? First of all, prepare your mind. What is about the topic? The topic about risk and 8 marks. So whatever we have explained above, we need to drill down. We don't want to repeat it. Means what are the methods to apply the risk? So you can mention that probability by probability, that is expected value, you can identify the risk. You have to mention about, there is one method about expected value. There are some another methods. These are the methods like sensitivity analysis, like probability analysis, adjusted payback, risk adjusted discount rate. First, you prepare your mind that 8 marks, we have to put 4 points. That is expected value, sensitivity analysis. These are the method for the risk. Now, important thing, what is the meaning of critical discuss, sir? Critical discuss means, number one, you have to explain the methodology, the topic, explain about, define, or I can say that better word is define, number one. And critical means importance. Importance. Now listen here, part C. There are 4 methods. I'm going to discuss one. You have to head it. There are several ways considering risk in investment appraisal. Number one, sensitivity analysis. What is this method about? Number one, this method, this technique looked at the effect of NPV about change of each project variable like variable cost, sales revenue, variable cost, whatever. You have to explain it. What will be the impact of change in NPV if individual variable change? This is explanation. This is about. This is define. This is importance. Critical discussion. Importance. Once sensitivity analysis calculated or sensitivity margin calculated, SM, then what to do? Identify the key variables and make the strategy accordingly. Make the strategy accordingly. Same case. Number one, define probability analysis. Do it. And what's the importance? You have to put the things accordingly. Rest, candidates, this will be your assignment for the tomorrows. That how to calculate this NPV. Calculate the expected NPV. You know very well how to calculate the expected NPV. If I support you with the question, it's very simple question. Number one, Weichsen company evaluating planned investment in new product costing 20 million. Payable start of the first year of operation. Product produced for 4 years, at the end of which production will cease. Investment project will have a terminal value 0. And financial information relating to project as follows: sales volume, selling price, fixed cost. Selling price have not been adjusted for selling price inflation expected 3.5% per year. And fixed costs given above in nominal terms. Fixed costs are given in nominal terms. It's already nominal, but sales need to inflate. Variable cost per unit depends on complete maintained between supplier of key components. Purchase department has made the following forecast. It means variable cost per unit, and this one is the point. So you have to calculate the expected value. An expected value of what? That is 10.8 multiplied by 45% plus 12 into 35% plus 14.7 into 20%. So whatever the price comes, that's called the variable cost per unit. Whatever the price come, that's called the variable cost per unit. It's almost $12 per unit. And what says variable cost in the forecast before taking account inflation? That is, this is so-called real. Need to inflate. Need to inflate. That's important. Bikesen can claim tax allowable depreciation 25% reducing balance, full investment 20 million, pays corporation tax this one. It is planned to finance investment issue of 10% loads, redeemable time, nominal after tax WACC 10%, real after tax WACC 7%, cost of equity 11%. We need to ignore here cost of equity. We have to ignore WACC real terms. We have to consider the nominal one. This is your assignment for the tomorrow's task. I will discuss this question, including I will add on the IRR as well, and I will show you the shortcut of the IRR accordingly. So today there are some system problem with the Pearson view for the formulas and all these things. Tomorrow it will be settled. It's the backend issues of the Pearson view. Candidates, this one is the point, and this one is the assignment. Already you have the question. Yes, candidates. Candidates, as I have already told you that investment appraisal is a topic. Investment appraisal is a particular topic where the examiner can examine anywhere. Section C, section A, whatever. Section B. Let's take up a question with respect to the section B. Let's take up a question with respect to section B. This is the question for the section B. You already have this question. And this is September 16 question. This is what September 16 question. Following scenario relates to question 26 to 32. Can you please read the question once? Very simple question it is. Very, very simple question. The following information relates to an investment project which has been evaluated by director of the fence company, listed company. Initial investment payable start of the first year of operation 3.9 million. Once again, here is the statement: initial investment payable start of the first year operation. Start of first year means start of first year means year zero. Year zero. Okay, just a moment. Some questions here. Mubashir Atik asked that, sir, we should not answer to the point. What is the meaning? Are you, Mubashir Atik, are you saying that? Are you asking that? Should we answer to the point? Can you please send me the question once again? Are you asking that? If you are asking that, should we answer to the point? Yes, I'm saying same thing. You must have to read the requirement carefully, the theory, and put the answer accordingly. Yes, to the point. Yes, to the point. A specific answer. Asking about describe, asking about explain this term, you have to explain it. Muhammad Faisal asking that, sir, which discount rate should use before and after? In NPV calculation, always take after tax discount rate. If it's not mentioned, only mention discount rate, not mention before after. It means by default after. If mention after discounted this rate, before discounted this rate, you will take after discounted. Can we use calculator instead of using the formula? Not highly recommended. Try to use the Excel functions. I mean spreadsheet functions. But at the last result, you can use the direct calculator as well. Like me, I use today because Pearson view working is not properly accordingly. And you people said to me that, sir, the question will take at least one hour. how we tackle huge data for every one question in section B, how to find which part scenario related to the particular question. Ghaus Raza, today is the first session of P2P. This question I will discuss once we add on more topics. For example, we add on WAC, we add on business finance, we add on business valuation. Then we take up a question. We will definitely take up a question with multiple topics. Then I will reply you accordingly. If I forgot that point, if I forget this point, Ghaus Raza, you must have to send this question once again. So move on. One more thing. I will take 10 minutes more of the session. Candidates, you know very well that discounted cash flow methods, it's not only equal to investment appraisal method is not only equal to NPV. Different more methods can be used like payback, ARR. So payback is a method from where we can use the data for the time period accordingly. So now move on. The following information relates to investment which is being evaluated by the director of Fence listed company. Initial investment payable at the start of the first year of operation 3.9 million. Net operating cash flow, scrap value. Directors believe that this investment project will increase shareholder wealth if it achieves a return on capital employed greater than 15%. So that's a return on capital employed greater than 15%. That's a target. As a matter of policy, director require all investment projects be evaluated using both payback and ROC. Shareholder recently criticized director for using these investment appraisal method, claiming that Fence out to be using accumulating preferred NPV method. Director have a remuneration package which includes financial reward achieving annual return on capital employed. Remuneration package based on accounting profit greater than 15%. Remuneration package does not include option scheme. Candidates, if you clearly study all the material of the syllabus, you can identify that there are two parts of the syllabus in this question. Can you reply me which two parts related to this syllabus? Which two parts? Which two parts? Number one, investment appraisal. Which one is number two? No, ROC is the part of investment appraisal. Tehmina? No, Mohammed Faisal, it's not dividend policy. It's financial management objective. Financial manager objective is to maximize the wealth of shareholder, but if the remuneration package belongs to own profitability of the company and encouraging to the management that your reward belongs to profitability, so maybe some actions will be taken. Some actions will be taken by the management for the sake of remuneration, not for the long-term perspective of the company. So this is also the mixture. So number one, what is the payback of the investment? Can you please reply me what is the payback? How to calculate the payback? It's very simple. It's very simple. The payback method. How to work out the payback? Do it quickly. The point of the payback. Simple payback. Can you reply me about this question? What is the payback? It's very simple. They are 0, 1, 2, 3, 4. Cash flows, that is 1200. I'm sorry. Initial investment 3900. 1200. 1500. 1600. 1580. Accumulated cash flows 3900. minus 1200, that is 2700, minus 1500, that is 1200. That means something more than 2 years. 2 years here and some proportion of 3 years. Plus 1200 divided by 1600. So that's equals to 2.75 years. It's very simple. Yes, very good. That is 2.75 years. A answer. What is the average investment? Average investment method. What is the return on capital employed? So payback representing the time period. Payback representing the time period. Where ARR method, accounting rate of return method, profitability method. You know very well the net cash flows. Here 0, 1, 2, 3, 4. Make it quick. The answer for the net cash flow total here. The net cash flow, that is 1200, 1500, 1600 and 1580. So we must say that first of all we have to calculate average I'm going to end the class by next 10 minutes maximum. Accounting profit, that is net cash flow 1500 plus 1600. But very important thing I will discuss at the last of the point, that's IRR shortcut. So don't go anywhere. So number one, these are the cash flows, but these cash flows not include the depreciation. And in this question, the depreciation without residual value is maximum investment minus 3,800 and divided by 4. So that's equals to 5,20,000 per year. And examiner mentioned that average investment. And how to calculate average investment? Opening investment 3,900 and ending investment minus 100. I'm sorry, that's 3,800 means 3,900 minus residual value. Yes, 3,900 plus 100 divided by 2. That's good. So 520. So here is the point, 520 divided by this 2000, and that's equals to 26%. And this one is the answer. Very simple. There are 5 questions here. Candidates, listen here. There are 5 questions in OTQ, but 3 belongs to theory. 3 belongs to theory. Number 28. Yes, one by one. 28. Which of the following statements about investment appraisal method is correct? Do let me on the screen reply. Do let me know. Number 1, return on capital employed method consider the time value of method. Yes or no? Reply me. Only one reply. More than 100 here. No. Return on capital employed not includes the time value. Hafiz Mubashir Ashraf, I will reply you later. Don't worry. Don't go anywhere. Return on capital employed must be greater than KE if the project to be accepted. No method. Return on capital employed is accounting figure. KE is equity market investor. Equity market investor and accounting, no relationship. So do remember, if something is no, what I said to you that if you are doing the true false or the OTQs, ask yourself if something is wrong, why it is wrong. If something is right, why it is right. Riskier projects should be evaluated with the long-term pay periods. Is it right? If we are investment in some risky country, for example, if we are going to move for the Syria, there is uncertainty here. We are going towards, for example, 1 month ago, the UK, some uncertainty about the Brexit. So should we invest for the longer period if there is some risk? No. We have to save ourselves, no longer, shorter. So remaining one, remaining one. Payback method ignores the timing of the cash flow within the payback period. Is it right? Yes, paying periods ignore timing within the payback period. Yes, this is right. But if discounted payback, this will lift up. Which of the following statement of offense is all correct? Number one, managerial reward schemes of listed company should encourage the achievement of shareholder objective. Yes or no? For any company, reward system of management should be parallel with shareholder objective. So this result, elimination of conflict. This is true. Yes, correct. Requiring investment project to be evaluated with ROC is an example of dysfunctional behavior encouraged by performance related pay. Yes, if performance related pay related to return on capital employed, accounting profit, it may possible that dysfunction create. Means management are encouraging to create some short-term aspects and not considering the long-term aspect of the shareholder. Hence, as an agency problem, a directing not acting to maximize the shareholder wealth. Yes, why this is correct? Why this is correct? Why Fence has agency problem? Fence has its agency problem because the remuneration structure are based on accounting profit, not the share option schemes. That's why all of these are true. Answer is D. Which of the following statement about Fence director remuneration is are correct? Answer. Which are correct? 30. Directors remuneration should be determined by senior executive. No. Directors remuneration should not be determined by senior executive, but it should be declared by non-executive directors to the non-executive directors. Introducing share option scheme help directors objective line with shareholder. Yes, true. Linking financial reward to target return on capital employed encourage short-term profitability. Yes. Discourage capital investment. True. The second and third is right. I will discuss later on about if you people have any confusion, what is the meaning of share option scheme? We will discuss later. Candidate, one last point, one last moment. 2 minutes more, not more than that. Candidates, listen carefully. I have a question for you and I need immediate reply. Just 2 to 3 minutes more, not more than that. 1 minute, 1 minute. Yes. Here 0, here 1, here 2, here 3, here 4. Yes. If I say that these are the net cash flows, answer me, huh? These are the NCF net cash flow, sorry. And these are the net cash flows, 200, 2000 in fact. And 560, 696, 1350, positives, huh? And 393. What is calculate IRR? What is IRR? Calculate the IRR. Please IRR. Calculate IRR. Calculate me the IRR. What is the IRR? Calculate the IRR. Yes, candidates, now listen carefully. There is a very shortcut for the IRR for just 5 to 10 second solution. You don't need to apply the formula of the it's mentioned on the books. You don't need to apply any function of a spreadsheet. Now listen carefully. You just mentioned what? You mentioned that is equal to IRR is equal to IRR. And it's mentioned B44 to G44, sorry, F44. And you will get the answer. No need to put any formula. That is 0.17969. That's approx 18%. That's all. That's all. Is this function available? I have done this function. You just put is equal to IRR and just select the rows and column. B44 minus F44. That's all. Your answer. Okay, candidates, after this session, there will be one feedback to you. And I hope that this session is definitely eye-opener for you how to handle the exam, specifically the direction, specifically theoretical aspect, specifically some shortcut methods accordingly. I will really appreciate if you really get something from this session, do reply me a constructive reply on the WhatsApp group. The WhatsApp group, I hope that WhatsApp group you have already got the WhatsApp group link? Have you got the link of the WhatsApp group? Are you people got the WhatsApp group link? Don't worry, we will provide you once again the WhatsApp group. Okay, this is another point that we have also shared you the WhatsApp group once again here. Thank you very much, candidates. We will live once again on tomorrow with the remaining part of investment appraisal with more technique as well as the business finance topic. Take care a lot. Take care a lot. Thank you. Allah Hafiz from my side. Allah Hafiz.